Kia ora, and welcome to Friday's Economy Watch, where we follow the economic events and trends that affect New Zealand. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. Oil prices are up as Iran flexes its diplomatic muscle and threats, one of which is an effort to block US ships from transiting the Strait of Hormuz. Meanwhile, Trump is backing away from more action in the region, potentially leaving US allies in the lurch. Through all of this, crude prices are rising again, and US pump prices never dropped back during the recent fall in crude prices. That has bond markets worried that inflation may be about to turn up again, and yields rose somewhat today. In the US, July job cut announcements were very low. In fact, US-based employers announced just 33,000 job cuts in the month, the fewest in 2 years. But AI led all the reasons for job cuts for a fifth straight month and was responsible for almost 11,000 during the month. The tech sector cut the most jobs, followed by the financial sector. Cuts in government and services were almost non-existent. This data comes ahead of tomorrow's July non-farm payrolls report, which is expected to show jobs growth at a very low 80,000. US jobless claims dipped last week, but only by what seasonal factors would have expected. There are now 1.84 million people on these benefits, slightly lower than a year ago and 2 years ago. Tough eligibility restrictions are restraining enrolment in conjunction with tougher restrictions on eligibility for food stamps there. More than 4 million people have been cleared off these programs, and much tougher restrictions are coming. The USDA has restricted access to data recording the numbers of people receiving this assistance. While still elevated, the New York Fed's Global Supply Chain Pressure Index eased lower in July. In Europe, retail sales sagged slightly in June, dipping 0.1% from May when a 0.1% rise was expected. But that leaves them up 1.2% from a year ago on a real and volume basis. Meanwhile, German factory orders rose 3.1% in June from May to be 6.5% higher than year-ago levels, an accelerating pace from May. Apart from a few noteworthy bumps in between, in fact, these order levels have been on an upswing since September 2025. And strong export growth in June delivered Australia an unexpected trade surplus of 1.9 billion Australian dollars when a deficit of 1.1 billion was expected after May's 2.4% billion deficit. Their exports rose 8.6% from a year ago, boosted by an unusual rise in gold exports, up more than 25% from the same month a year ago. And global container freight rates turned up marginally last week from the prior week to be 77% higher than year-ago levels. Outbound rates from China to the US drove the rise, while rates to and from the EU were lower. Those rates have to compete with very fast and successful overland rail services out of China. Meanwhile, bulk cargo rates jumped more than 12% in the past week to be 60% higher than year-ago levels. The US Treasury 10-year yield is now just on 4.67%, up 5 basis points from yesterday. The price of gold has dipped to $4,245 an ounce, down $8 from yesterday. Silver's dipped 50 cents, just on $61.50 an ounce. But oil prices are up $3 from yesterday and now just under $77.50 a barrel in the US, while the international Brent price is now just on $82.50 a barrel and up $3.50. The Kiwi dollar is down 20 basis points from yesterday at just on 58.7 US cents. Against the Aussie, with little change at 83.4 Australian cents. Against the euro, we've dipped 10 basis points to 50.9 euro cents. That all means our trade-weighted index starts today at 62.4, which is down 10 basis points from yesterday. And the Bitcoin price starts today at $64,550 and down 0.2% from yesterday. Volatility over the past 24 hours has stayed low, at just on plus or minus 0.6%. You can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again on Monday.